Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news about the start of a tariff trade war, a reprise of the 1930s effort also started by the US, and one that ended badly for everyone. The week ahead was supposed to be basically about jobs, both here and in the US, with our household labour force survey data out for December on Thursday and the US non-farm payrolls report out for January on Saturday. But Trump's imposition of 25% tariffs on Canada and Mexico and 10% tariffs on China will no doubt dominate the news with its consequences. However, there will be other economic data coming, including key Wall Street earnings reports, January PMIs, central bank decisions from India and the UK, and China's financial markets will return to work after their Chinese New Year break on Wednesday. Also, Chinese buyers may be back at Wednesday's dairy auction, which will be an important event after last week's sharp run-up in the whole milk powder price at the Pulse event. And don't forget, this will be an interrupted week with a public holiday in New Zealand on Thursday, Waitangi Day. So Friday is likely to be a day with many people taking the day off to get a 4-day weekend. But not us, of course. The big news over the weekend was the US imposing 25% tariffs on its neighbours Canada and Mexico. Worryingly, these mean the US has unilaterally broken its Trump-imposed NAFTA II trade treaty obligations. And more of an issue for any country contemplating making a treaty with the new US administration is that the basis of these tariffs are essentially jingoistic and trumped up, that pretends anecdotes are common sense when they're just raw self-serving prejudice. Mexico and Canada hit back immediately. Canada also imposed a 10% tariff on their oil exports to the US. China's going through the WTO dispute process. An easy way to keep an eye on US inflation is to watch the daily US petrol price. As of today, it is $3.10 a gallon. We'll check back regularly to watch how tariffs impact that. Of course, demand will impact that too. How will this affect New Zealand? We have an article about that on our website. Earlier, the alternate US inflation measure, the one the Fed watches, their Personal Consumption Expenditures Price Index, rose 0.3% in December from November, the highest gain in 8 months. But this was the rise expected. That means that their year-on-year PCE inflation came in at 2.6% and its highest in 7 months by this measure. The new tariffs are likely to mean higher inflation, something Trump acknowledged in a Fox interview. There were no surprises in any of the income, consumption or savings data in the PCE release. This may turn out to be the low point in their inflation cycle. The January Chicago PMI recovered from a weak December result on the back of better new order inflows and higher production levels, but it remains in deep contraction territory. The outlook responses in this regional survey weren't very bright. In Canada, apart from the new tariffs from the US, they are wrestling with what the 25-year extreme difference means between their policy interest rate of 3% and the Fed's 4.25 to 4.5%. In market terms, that's a 140 basis point discount the Canadians carry. It had been thought that 100 basis points is the comfort zone for financial markets, so we may start to see reactions and implications. There could be lessons for other economies, although Canada may be facing extra pressures from the tariffs. Japanese industrial production rose in December from November, and that limited the year-on-year decrease to less than expected. And Japanese retail sales rose 3.7% in December from the same month in 2023, up from a 2.8% gain in November, and better than market expectations of a 3.2% rise. This is the 33rd straight month of expansion in retail sales in Japan, and the fastest growth since June 2024. Rising pay levels are getting the credit for the expansion. In India, the new national budget has cut income taxes in the hope it will arrest the cooling of their economic activity by enhancing domestic demand. Those earning 24,000 New Zealand dollars will pay no tax, and the tax bands above that have been indexed higher. They will still run a deficit of 4.4% of GDP if they can maintain their 6.8% growth rate. They will pay for the tax cuts by restraining their spend on updating their infrastructure. India also cut tariffs. In Argentina, their central bank cut its policy interest rate by 300 basis points to 29% on Friday as inflation eased again. But the annual inflation in Argentina is still at 118% in December, but that's the softest increase since July 2023 and down from 166% in November. EU inflation expectations rose to 2.8% in the ECB's December survey, taking it back to early 2024 levels. In the ECB MPS, they noted there is still more work to do to quash these expectations. Actual EU inflation ended 2024 at 2.7%, and it too is rising. Aussie producer prices rose 3.7% in December from a year ago, but even if that is high, it was their slowest since early 2021. The US Treasury 10-year yield is at 4.54% and up 3 basis points from Saturday at this time. And the price of gold will start today at $2,799 an ounce and down $10 from Saturday and off its all-time high. And oil prices are virtually unchanged at just on $72.50 a barrel in the US, while the international Brent price is now at $75.50 a barrel and holding the Saturday retreat. And the Kiwi dollar is now at 56.4 US cents and down 40 basis points from this time Saturday. Against the Aussie, we're down 10 basis points at 90.7 Australian cents. Against the euro, we're little changed at just under 54.4 euro cents. That all means our trade-weighted index starts today at just on 67.1 and down 10 basis points from Saturday. And the Bitcoin price starts today at $98,142 and down a sharp 6.5% from this time Saturday. Apparently, isolationism and tariffs are not good for crypto. Volatility of the past 24 hours has been moderate at plus or minus 2.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.